Welcome to GEPL Capital's Market Outlook video. I'm Sanket Bendre. Let's start ahead with the Market Outlook video. So in this video, we will be discussing about the key updates that happened in this week. And furthermore, today, as we saw that the tariff has been imposed on the pharma sector as well. So we will discuss some implications about that as well. So let me share my screen and we will start the video right away. I hope my screen is visible. So in this slide, we have jotted down 5 of the key points that happened in this week. So let's discuss one by one, and then we will talk about the pharma sector as well. So in the first update, so the start of the week saw the implementation of GST 2.0 across different products. Furthermore, Tata Motors recorded a robust start to the festive season, delivering 10,000 vehicles and receiving more than 25,000 customer inquiries on the first day of Navratri itself. Similarly, Maruti Suzuki and Hyundai also saw good demand, as Maruti Suzuki itself sold 30,000 cars and Hyundai also sold approximately 11,000 cars as on the first day of Navratri. So we can see that the GST implementation as well as the good demand in this festive season, we are seeing that the auto segment overall is seeing a good demand, and we should see some further updates as we move forward towards the Diwali season, as these companies should record a good growth in the upcoming quarter. On the next update, so we will see that we saw that the Ministry of Defense has signed a 60,370 crore worth of contract with Hindustan Aeronautics Limited for the procurement of 97 LCA Mk1A aircraft for the Indian Air Force. So this deal includes 68 fighters and 29 twin-seaters along with associated equipment for the Air Force. So overall, a very positive update from HCL, given the Indian government is focusing on strengthening its defense sector overall by procuring products within the India and manufacturing the overall defense products within India. So our key update we are seeing for the HCL in the defense sector. On the next update, so we saw that yesterday Accenture reported its fourth quarter FY 2025 results, beating the Wall Street estimates driven by the resilient demand from enterprise clients for the AI-driven consulting and services. However, the company has provided a muted growth guidance, which is approximately in a single digit, which could pose a downside risk to the estimates of the Indian IT companies for FY 2027. So we saw that the most of the broker houses have been giving a good expectation for the Indian IT companies for FY 2027, and with the result out for Accenture itself, we saw that we are seeing that the estimates, the guidance for the overall upcoming quarters could be muted, and given the uncertainty regarding the tariffs plus the H1B visa issues. So overall, the IT sector should currently see a muted growth in the upcoming quarters as well. The next update today itself, we saw that US President Mr. Donald Trump has announced a 100% tariff on the pharma sector, with an exception for the companies that have manufacturing capacity in the United States. So specific details are yet to be released, but preliminary details showcase that these tariffs are mainly targeted towards the branded and patented drugs companies. So we will discuss this point in detail as we move forward in the video. And in the next slide, we have discussed in detail about this point itself. On the last update, we are seeing that apart from the pharma sector tariff, the US will also impose tariffs on heavy-duty trucks and kitchen cabinets, and the tariff should be imposed of approximately 25% for heavy-duty trucks and 50% respectively for the kitchen cabinets. 30% tariff will be imposed for upholstered furniture. So overall, these tariffs are expected to be implemented from 1st of October, and we should see companies supplying these products to the United States itself should be impacted given this imposition of tariffs. So let's discuss the impact of pharma sector overall. So as we know that 100% tariff has been imposed, will be imposed starting from October 1st on branded and patented drugs, unless a company has or is building a manufacturing plant within the United States. So this presents a fresh challenge for the Indian companies who do not have a manufacturing facility within the United States, or are not planning to build plants in the US. So Basically, these tariffs are excluded for generics as of now, and companies that have a manufacturing facilities within the United States. So this move by United States come after the comes after the as they plan to increase the domestic manufacturing itself and grow the pharma industry overall. So if we see that the US in itself is the largest market for Indian drug makers, given India exported approximately $3.7 billion worth of pharma products to the US in the first half of 2025. And in 2024, the US imported nearly $233 billion worth of pharma products and medicinal products as per the Census Bureau data. So we are seeing that US is heavily dependent on importing farm products instead of manufacturing within the country. As a result of that, we are seeing in order to boost the production within the country, these tariffs are being imposed by the country, by the United States. So if you see the several prominent Indian manufacturers, including Sun Pharma, Dr. Reddy Labs, Cipla, then Lupin, then Aurobindo Pharma and Zydus licenses. They maintain a substantial portion of export to the US. Additionally, companies such as Syngene, Gland Pharma, Biocon, and Piramal Pharma also generate considerable amount of revenue through their generic special medications and biosimilar products. So we are seeing that companies such Indian companies should face a heavy impact if there are no manufacturing facility within the US, as they heavily rely on as more than 40% of the revenue is generated through exports within the United States itself. Furthermore, if we see that Biocon has commissioned its manufacturing facility in the United States, so we might see some less impact of this tariff on the company overall. And other Indian companies include Lupin, Dr. Reddy's, Cipla as well, have manufacturing facilities in the United States. So we might see some lower impact compared to the competitors who do not have a manufacturing facility within the United States. So overall, as a result of this notice, we saw that Nifty Pharma overall was majorly impacted today in today's trading session. Furthermore, IT companies were also impacted as an imposition of tariff on services sector overall, plus a weak, muted growth guidance by Accenture, and should further pave to this decline in the market in the Nifty IT as well as Nifty Pharma sector. Other sectors also saw a blip, but in today's sector, given the overall weak sentiments across the market. So I guess that's all from in this video. In the next video, we will discuss on some other data factors that will be released in the upcoming weeks. So thank you for watching this video, and do like, share, and subscribe our video for more such updates in the upcoming future. Thank you.